Hello and welcome to Investment Insight. Before we begin, make sure to subscribe and hit the like button. Now let's break down what's happening in the markets today in a clear and simple way.
Yeah, and there is definitely a lot happening today.
There really is.
Mm.
Looking at the recent data, there's this massive ripple effect happening in global markets right now.
Right.
And it seems to be driven by, well, two interconnected themes. First, a sudden scramble for U.S. dollars all around the world.
Uh-huh.
And second, this dramatic, what analysts are calling a K-shaped split happening in Asian economies.
Yeah, that K-shaped split is wild when you really look at the numbers.
Exactly. So our mission for this deep dive is to demystify these complex global finance moves for you, the listener. We're going to look at why countries are suddenly asking the U.S. for these financial safety nets.
Which is super interesting timing.
It is. And we'll get into why the global energy shock is creating extreme winners and absolute losers overseas. And most importantly, what it all means for an everyday American just trying to understand the global economy.
Right, because it does affect us here at home.
It really does.
Yeah.
Okay, let's unpack this. I want to start with this global scramble for the U.S. dollar.
Yeah, let's start there.
So, looking at the research, there's a term that keeps popping up. Currency swaps.
Yes. Currency swaps.
It sounds like, I don't know, intense Wall Street jargon.
I mean, it does, yeah. But it's actually, if you strip away the fancy words, it's pretty simple.
Great, get down for it.
So imagine having a pre-approved emergency credit card from like a very reliable bank.
Okay, I'm tracking.
You don't necessarily want to max out that card, right? But just knowing it's in your wallet.
It gives you peace of mind.
Exactly. It stops you from completely panicking and, I don't know, selling off your living room furniture if your car breaks down.
Right, right.
A currency swap is that emergency credit card, but for foreign countries. They are asking the U.S. government for a guaranteed line of U.S. dollars.
Okay, so according to recent analysis, on April 22nd, an official named Besant noted that Gulf and Asian allies are actively asking the U.S., so either the Fed or the Treasury, for these exact currency swaps.
Yeah, they want that safety net.
And the goal, apparently, is to keep the dollar funding market orderly, so these countries don't desperately sell off their U.S. assets.
Right, which would be bad for everyone.
Right. And furthermore, on April 21st, President Trump directly mentioned that a swap with the UAE, the United Arab Emirates, is currently, quote, under review.
Yeah. And what's fascinating here is the pushback we saw almost immediately.
Yeah, wait, because the UAE is an incredibly wealthy oil nation, right?
Oh, I'm massively wealthy.
So why would a rich country like that need an emergency credit card from us?
Well, that's exactly what the UAE ambassador pointed out. He actually went on the record to push back on the idea that they need any sort of external financial rescue.
Oh, really?
Yeah, he was very clear about it. And if you look at the data, the current Federal Reserve swap balances are actually tiny right now.
Like how tiny?
Only about $101 million as of April 22nd.
Wait, 101 million? That's like pocket change for global governments.
Exactly. I mean, compare that to the billions, literally billions, that were moving through these swap lines during the 2020 pandemic panic.
Oh, wow. Okay, so if they don't need a financial rescue, what's the point of the swap?
Because this isn't a banking crisis. It's an energy and geopolitical shock.
Okay, explain that.
So think about the Strait of Hormuz. Disruptions there have severely slashed shipping traffic, and because of that, oil is hovering above $100 a barrel.
Right, which is painful.
Very painful. So these wealthy countries, they aren't running out of money, but they are setting up preventative safety nets.
So it's like putting on your seatbelt before you start driving.
Exactly. And it really proves that in times of crisis, the U.S. dollar is still the ultimate global backstop, period.
That makes total sense. Okay, so that perfectly bridges us to the second big theme, because the very same geopolitical tension and high energy prices making countries beg for U.S. dollar safety nets. Well, they are currently slamming into the Asian economy.
Oh, hard. Very hard.
But looking at the data, it's not hitting everyone equally.
Not at all.
Right, so let's talk about this K-shaped economy concept. For anyone new to this, just to imagine the letter K. You have one line going straight up and one line going straight down.
Right, a total split.
Exactly. And according to the research, Asia is currently splitting right down the middle based on one really simple question.
Which is whether or not you have a buffer to absorb the high cost of energy.
Right. So let's look at the data for the upward line on the winners.
Yep.
South Korea and Taiwan.
Yep, the upper K.
Now, here is what confuses me. South Korea and Taiwan import almost all of their energy.
Nearly all of it, yeah.
So with oil prices this high, over $100 a barrel, Their economy should be completely tanking.
Mm.
Why are the line on the K going up?
Well, think of it like this. Imagine you get a massive unexpected rent increase on your apartment,
Oh, okay.
like a brutal increase. But on the exact same day, you get an incredible, life-changing promotion at work.
Oh, okay. I like that.
Right, so your rent went up, but you can pay it easily without breaking a sweat because your new income is just so high.
So what is South Korea's promotion in this scenario?
Artificial intelligence. The AI boom is acting as a massive financial buffer.
Wait, really? Just AI?
Well, AI hardware specifically. According to the data, South Korea's first quarter GDP grew by 1.7%.
Which is huge.
It blew past expectations, and it was heavily driven by AI semiconductor exports. I mean, SK Hynix, one of their biggest chip makers, they just reported record quarterly profits.
Wow. And Taiwan is seeing the same thing.
Even more so, in Taiwan, March export orders hit a record $91.12 billion.
Billion with a B.
With a B, that is up an astounding 65.9% from the previous year.
That is just mind-blowing.
And it's heavily driven by telecommunications and electronics, basically the physical parts needed to run AI.
But, I mean, we have to add a caveat here, right? Because an everyday American hearing those numbers might think everyone in South Korea is just swimming in cash right now.
Yeah. Oh, right. No. This is definitely not a broad economic miracle.
Okay, what do you mean?
South Korean producer prices, so the costs for everyday businesses, those are still up 4.1%. That's a 3-year high.
Oh, wow. So everyday things are still getting more expensive.
Exactly. Their macro success is just heavily concentrated in a few massive AI-related companies.
I see.
Yeah, those tech giants are basically acting as a financial shield for the whole country's GDP, hiding the pain that normal businesses are feeling from the expensive oil.
Okay, that makes sense. So we see the upper line of the K. But what happens to the countries that don't have a multi-billion-dollar AI industry to pay their ridiculously high energy bills?
Well, it gets ugly. That brings us to the downward line of the K.
Right. And looking at the data, the Philippines and Pakistan are taking direct hits.
Oh, yeah. Direct hits.
So in the Philippines, inflation is up 4.1%, and diesel prices, this is crazy, diesel prices have skyrocketed 59.5%.
It's devastating.
It's so bad that, according to recent analysis, farmers are literally leaving their crops to rot in the fields.
Yeah, which sounds crazy until you do the math.
Right, because transporting the food to the city costs more in diesel than the crops are actually worth.
Exactly. You'd lose money just driving the truck.
So the government in the Philippines actually had to declare an energy emergency.
Which is a huge deal. And this is a textbook example of what economists call demand destruction.
Demand destruction. Let's unpack that term.
Basically, it means things have gotten so expensive that people simply stop producing and buying. The economy just seizes up.
Oh man, and it's not just the Philippines. Look at Pakistan. The data shows they've faced massive 6 to 7 hour daily blackouts.
Yep, rolling blackouts.
Because they're struggling to even bid on natural gas shipments, LNG shipments, just to keep the lights on.
Right. Because unlike the U.S. or, South Korea, these nations have very narrow policy options.
Yeah, I mean, a listener might be wondering, why doesn't Pakistan just print more money to pay for the gas? Or why doesn't the Philippines just offer massive stimulus checks like the U.S. did a few years ago?
Because they can't. If they just print money, they will crash their own currencies.
How does that happen?
Well, think about it. If you print a ton of your local currency, it becomes less valuable.
Right.
But global energy, like oil and natural gas, is priced in U.S. dollars. So if your local currency drops in value, it now takes even more of it to buy the exact same amount of energy.
Oh, so it's like a death spiral.
Total boom spiral. They just can't easily print money without causing hyperinflation. They are trapped.
That is brutal. Okay, so we have tech giants winning and energy importers losing. But looking at the data for China, it seems, I don't know, incredibly contradictory.
China is a wild card right now.
Yeah. How do they fit into this? Are they on the upward K or the downward K?
What's fascinating here is that China isn't on the upward or downward line of the K.
Okay.
The K is actually happening inside China itself.
Oh, wow. An internal K-shape.
Exactly. It's a split screen.
Okay, so let's look at the macro level first.
Yeah.
The data shows China's surviving. They posted a solid 5.0% first quarter growth rate.
Right. 5% is nothing to scoff at.
And they kept lending rates steady. I read that this is largely because they have massive strategic oil reserves and a pretty diverse energy mix.
Yeah, they prepared for energy shocks. So on paper, as a whole country, they look fine.
Right.
But When you look on the factory floor, it's a bloodbath. Traditional manufacturers are getting absolutely crushed by the rising costs of raw materials.
Like what?
Copper, aluminum, plastics, the inputs for basic goods. The costs are so high right now that some factories are cutting production in half.
Wow, just cutting it in half to survive.
Yep. They can't afford to run the machines full time.
Meanwhile, and this is the wild contrast, I'm looking at Hong Kong's financial markets. There's a Chinese company called Victory Giant.
Oh, yeah, I saw that.
They make circuit boards for AI servers. And their stock surged 50.1% on its very first day of trading.
50% in one day.
One single day. So it's like, imagine a single company building. The factory floor downstairs is struggling to keep the lights on and pay for basic copper.
Right.
But the tech lab upstairs is throwing a massive party with billions in investment.
That is the perfect analogy. The upstairs is booming, the downstairs is drowning.
So as an everyday investor, you can't just invest in, quote, China as a whole right now.
No, absolutely not. You have to know exactly which floor of the building you're buying into, because the macro number hides the micro pain.
Okay, this has been an incredible deep dive. We've covered a lot of ground. So what does this all mean? If you had to summarize what our listeners should take away from all these sources today, what's the bottom line?
The bottom line is that right now, the global economy isn't about geography anymore. It's not about East versus West.
What is it about?
It's entirely about buffers.
Buffers.
Yes. The ultimate buffers in today's world are access to U.S. dollars, like those swap lines we talked about, and access to the AI hardware boom.
Right, the Asian tech sector.
Yeah. Exactly. If a country lacks those two specific things, they are highly, highly vulnerable to these current energy shocks.
Yeah.
They will get crushed by the rising prices.
Wow. That really puts it into perspective. It's all about what safety nets you have in place before the storm hits.
Exactly.
Well, I want to leave you, our listener, with a final thought to ponder today. We've seen how much the rest of the world relies on the U.S. dollar as a safety net when global geopolitical shocks happen overseas, right?
Mm-hmm.
They all ask for that emergency credit card. But what happens to the global economy if the shock originates inside the United States?
Oh, that's a scary thought.
Where does the world go for an emergency credit card then? Something to think about as you navigate the markets this week. Don't forget to subscribe and hit that like button.